Hello, everyone, and welcome to another episode of the Eitel Insights podcast. My name is Dane Eitel, and I am the founder and lead analyst for Eitel Insights. Today, we're going to be going over the Greater Vancouver Condo Market update, and specifically, we're actually going to focus in on the city of Vancouver for a portion of today's podcast, and then, of course, expand out and do the overall market update. Welcome to our new subscribers. We have surpassed 650, so of course, our next goal is to surpass 700. With your help, we'll be able to achieve that here over the next few podcasts. So please feel free to share this content with your friends, your family, your social media platforms. It has been helping out a lot of folks. And one thing that we do ask is give us that thumbs up. It's one click for you, but it goes a long way for us, so we would really appreciate that if you don't mind. And if you're so inclined, please feel free to leave a nice comment or a question for a future podcast, and we'll try to get to that. Without really any further ado, we're going to get into the charts. And like I say, we're actually going to start here on the city of Vancouver, or Vancouver proper, and then expand out to the overall Greater Vancouver market update. So I'm just going to share the chart on your screen here, and then we're going to just move it over to the side so that we can continue the conversation. So here is the chart for the Vancouver proper. It had some volatility, undeniably, from 2017 to 2018. The actual peak, or the zenith, the apex in this price occurred in January of 2018. That price point was $1,092,000, so basically 1.1 million as the tippity top of the market. Now, noticeable, this price only tested for 1 month. So is it a true top? Well, it is a zenith, but we actually like to see prices test multiple times to give a better indicator of a market peak. So we actually identify 970,000 as that peak, but the data point did come in at 1.1 at one point in time. So of course that is on the chart. Also noticeable and more impactful is the recent move that this chart has transpired. We broke this uptrend that was established back in 2019, where we had found our near-term low of roughly $775,000. And now you see the November price broke that and came down to $765,000. So not only did it break the uptrend and break decidedly lower than the October sales price, which was $861,000. So $96,000 was eroded month over month. Now, technically speaking, when data breaks an uptrend, a downtrend, or has a trend change, you do see some volatility enter to the market. So, of course, a $96,000 price move is volatility. We will likely see that occur here over the short term. That could potentially even see prices come back up to that lower end of the middle threshold, right around 830,000. That's a possibility. Or it's a possibility that it could go right down to the bottom of this market cycle that we have forecasted, right down to 725,000. The opportunity here is noticeable. Okay, so Eitel Insights has guided you away from purchasing in middle thresholds or high thresholds, but we do advise to enter into low thresholds. Vancouver proper is an owner-occupied investment opportunity right now. When prices are down 30%, which it is, okay, from the zenith to the current prices, it's down 30%. Let's be fair. Let's take the actual peak price that we identify of 970,000. That's down 21%. Either way you slice it, it's recession territory. A correction is a market down 10%, greater than 10%, and a recession is a market down more than 20%. This one falls into that case no matter how you slice it. Again, either 30% from the tippity top of the chart or 21% from what we identify as the market peak. So again, investment opportunities are here, especially for the owner-occupied. When markets are down 30%, and again, this is in Vancouver proper, but some of the sub-areas, not all trends move the same, as we know from the Greater Vancouver conversation we've had recently. Coquitlam doesn't move lockstep with that. Similarly, Yaletown doesn't move lockstep with the overall city of Vancouver movement, nor does the downtown sub-area, right? But both of those individual markets are actually down 30% from their true peaks. So again, you can definitely owner-occupy purchase. Now for investment, right, what we see here is basically these current prices have eroded the past 4 years of price increases. January 2017 average sale price was $775,000. That's right where that data point, again in 2017, broke out or established this low channel of this upcoming cycle, we do believe. So it expanded off of where we have that orange identifying line and right up to 1.1 million, from $775,000 in January of 2017 to 1.1 million in January of 2018. It's quite a run. Unfortunately, all of those gains that have been declining, slowly but surely, have now been erased. Again, volatility will likely be introduced to this market. So over the short term, you could see prices come back up over your 4-term year investment. But over the longer term, we do believe prices will go back down to that 2016 level, 725,000. That's ultimately where we likely see this market bottoming. It could potentially test this bottom here in the short term, again, with this volatility introduced. But over the longer term, we do see the inventory continue to rise, which will create competition amongst the sellers, increase the inventory, and maybe enter into what we have forecasted would occur and is definitely occurring now, a fear of overpaying for a depreciating asset. Now, why did prices drop, and why are maybe people a little bit more fearful of overpaying for a depreciating asset? Well, the city of Vancouver introduced that 3%, or the increase, the tripling of the vacant home tax from basically effectively 1% previous to upcoming 3%. That 3% tax, just in and of itself, is $22,950 if you leave your property empty throughout 2021 at today's prices. I guess the silver lining in property values decreasing. Last month at $861,000 average sale price, your tax bill would have been $25,830. So you are seeing a decrease in your tax bill, but you also realize the $96,000 adjustment in your value of your property. So probably not the win that you're looking for. Again, as we did mention in our previous podcast, due to basically the overwhelming demand, Eitel Insights has re-entered into the real estate arm, your personal selling, buying, and your investment selling and buying side. We can help you with your individual transactions, myself included. You can actually work with myself. So I have been a realtor for the past 12 years. Again, we've taken basically the last 3 years off to create this analytics program where I go over 55 to 60 individual markets across Canada in a given month. That was an arduous task. We've accomplished that task. We have that down to a science now, right? I know how to do it. It takes a long hours, but that's okay. So again, if you want to have this actionable intelligence offered to your individual market or properties or property, that is available to you now. Now, the best way, we have heard from some people that tried to reach out through realtor.ca and a couple other sources. That's fine. You can access us there, but we don't actually check those as often. The best way to get in touch with us is directly through the Eitel Insights website, and that's in the description as well as my email that you can send a direct contact so we can start the process. So the owner-occupied investment can definitely occur. Prices are down 30%. For the investment purchase, maybe we have some more time to wait because you'll just be adding years to your investment overall returns, because these prices will be likely multiple tested here upcoming over the next year or possibly two. But that being said, if you want to get the purchase price that you're looking for, today is an opportunity. Upcoming, you'll see more properties on the market that'll maybe be a bit better for the investment mentality, since you don't necessarily care about the carpet or the kitchen. You do to a degree, but not as much. So when you see a plethora of inventory show up here in 2021 with the continued completions, you'll likely see some more advantageous prices or opportunities upcoming. And for the owner-occupied, there's some slamming deals for some very good properties in the city of Vancouver proper in the condo market. So that being said, I think we did cover most of everything that I wanted to here for the city of Vancouver. So we're just going to expand out and start talking about the greater Vancouver overall market data that has come out. Similarly to, again, I'm just going to share this on your screen, and then we're going to move it over to the side. So similar to the city of Vancouver, Real Estate Board of Greater Vancouver, condo prices technically broke their uptrend as well, now likely due to or the $96,000 drop in the city of Vancouver definitely aided this move down. But across the spectrum, no prices really escalated to any old or previous highs, such as maybe a North Burnaby, which recently has been doing very well with their introduction of all of those pre-sold properties, newly completed properties, which kind of does artificially increase the price, because those properties initially sold as a pre-sale or private deal with the developer. They don't actually come up to the MLS and include it as the average sale price. So when they come on for resale, basically the first time, it does add brand new, highly valued properties to the overall market. So it does artificially increase it for a bit until that cannibalization factor happens and prices ultimately do come lower, like what we see in the city of Vancouver, of course. So again, back to the investment mentality. We've been in touch with clients here over this last couple of weeks that said, I want to buy 3. And we said, okay, what are the areas? And I said, okay, out of those areas, you can probably buy 1 in the short term. Maybe next year buy the other 1, and another year after that, we'll probably be looking at that 3rd purchase. And the folks were very grateful, because they said, see, that's why we want to work with you. The other realtors that we have spoken with said, let's go buy all 3 right now. commissions, right? Rather than actionable intelligence offered to the clients. And again, there's nothing wrong. We're not trying to denigrate the real estate industry. That's how it has worked. You tell the realtor what you're looking for. They try to find a suitable investment based on your instructions. What we offer here is our analytical interpretation of how the forecast will look. So far, they're pretty clean. And I mean, we've guided you to a 30% saving in Yaletown, right? So again, now that that is here, we don't necessarily see a 50% saving coming. So we want to start taking advantage of these upcoming opportunities in select areas. Other areas will have great opportunities coming in the near-term future. So again, get in touch with us if you're looking for those opportunities, either for owner-occupied or for your investment purchases. Conversely, if you're in a North Burnaby and you see these prices down only 5%, and you're thinking, maybe I want to get out of my investment, we would probably be on a similar track with you in that aspect. Since prices are only down 5% in North Burnaby and downtown is down 30%, maybe that market has some room to fall off. Of course, if you're a believer that the market's going to take off, that's fine and fair. There's bulls and bears in every single market. So again, I digress, and back to the chart here. Prices, again, did drop $30,000 from the previous price, so they're down to $657,000. Basically near the near-term lows created in 2019. Those were right around 635 average sale price, so we still do have a bit of room to go. Again, now that we've broken this trend, there will likely be some volatility. Now, that could result in prices escalating back up to the higher middle threshold of 675, or it could go all the way back up to 700,000 in the short term and then precipitously fall off again. That's our base case, at least. Likely what could happen as well is prices decline, like I say, down to that 635 marker, which is that lower band of the yellow threshold. If that does occur, that'll be a very important time for the market because then it'll be the first test of the prolonged uptrend, the black trend lines, basically since 2017 when prices escalated after they broke out of that channel. So if they break back into that channel, we might see a similar effect, except breaking hard back in, like what we saw in the detached market during 2018-19. But that's a conversation for a different day and a different podcast. Upcoming, we will likely see, again, volatility here in the Greater Vancouver market. We are seeing more and more inventory likely to come on board during 2021. The sales have decreased, and the sales for the condo market never really experienced the boon to the market that the detached did. There was that exodus from the condo market into the detached for the quality of life, for working from home, and all the other factors. So where we see the detached market had pent-up demand from your months at home, plus pulled forward demand from probable purchases in years upcoming, taking advantage of the low interest rates and lower prices compared to previous times, that made sense. The condo market never really experienced that at all. You did see the pent-up demand that was captivated in their home, couldn't purchase, and that seems to have been exploited here recently or expended. But there wasn't that pulled forward demand. There wasn't any rush to buy. And now we're starting to see maybe that need to sell continue to rise. So that being said, we're just going to toss up the inventory chart on your screen here, and then we'll go over that here rather briefly. So the inventory for overall Greater Vancouver came down to 5,669 active listings. Now that is down from the previous month where we were over 6,000 active listings. That's usual given historical seasonal norms. 2020 has been anything but usual. So we do, historically, October, November, December months of inventory or activity decreased. Of course, during September, October, and November, there was that activity because we didn't have any in the spring. So spring got pushed to summer, summer got pushed to fall, and we'll see if fall gets pushed to winter or winter is just usual winter. That remains to be seen. Coincidentally, again, the data is testing this uptrend. Now, these uptrends are meant to be broken. They're basically your yearly uptrends. You see that uptrend during 2017, 18, eventually broke in 2019, and now we see this new 2020 uptrend increasing inventory. December 2020 will unlikely see a ton of brand new inventory added to the market, but it will also unlikely see a lot of purchasing. So it'll be interesting to see how the December data finalizes throughout the month. But again, going to the technicals, you can see we're well above that prolonged uptrend, that black trend line that you see. That would basically imply inventory would need to come down below 4,000 to technically test that line again. I don't believe that'll be tested here in 2020, 2021, and possibly in 2022, 2023 is when we start to see this test rear its ugly head, and that'll indicate probably a market change when that long-term trend breaks, similarly to as you see this long-term trend break in the overall downtrend, these two wide swathing orange lines. Once they broke, we see the inventory precipitously rise. Now we're going to go to the new inventory. It did dramatically drop from being over 3,000, or sorry, right around 2,800 last month in the month of October to basically 2,080 here in November. Now we're going to say something in jest. This is a historical high for new month of inventory for November. And now that's just a joke because the real estate board and others were kept saying how historically high Octobers were for sales compared to strictly Octobers. Well, if we strictly compare November new inventory, this is historically high, but it's not high. I mean, you see the inventory or the chart, it's come off of its peaks, right? So this is a decrease of new inventory, but it also is a higher low, and that will actually be interesting. And again, December needs to prove itself and put in the data points. But if we do see continual higher lows, that's how we do believe 2021 will see that a new impetus, an even higher need to sell, and a rash of listings likely coming to the market, which again will be a benefit to the buyers that have been long struggling basically since they got priced out of the market in 2016, 2017. It's been a tough slog, but areas are coming back into your price range. Yaletown's back to 2016 prices. Other areas are as well. So if you're looking for that purchase, get in touch with Eitel Insights. We'd be happy to work with you. Now back over to the sales. And this is again why we say that just toss it on your screen here. This is why we say we believe it was pent up demand, not necessarily that pulled forward demand. You do see two data points breaking out of that sales channel. If you've noticed the detached, we've had about 4 or 5 months break out of that sales channel. So again, pent up demand pushed it out for 2 months. Detached market, probably a lot of pulled forward demand expedited that rise or that increase in the sales. We didn't see it for the condo market. We are definitely seeing it for the inventory side of the condo market, but definitely not the sales. So this leads to a supply demand problem. For many, many years, the demand was completely outweighing the supply. Since 2019, coming into 2020, we see those metrics that we offer to Eitel Insights clients closing the gap. Demand is still just above the supply, but by a hair, and that's really due to this recent, past few months increase. And we take it on a weighted average. So, upcoming in 2021, we do expect that supply to be above demand, which of course negatively impacts prices, but positively impacts buyers. So with sales re-entering this channel, it can break out during maybe the spring, summer season when you do see that plethora of inventory. But we doubt it. It'll probably remain at this low-lying level just because there is that exodus from downtown was for a reason, right? There still is the work-from-home movement. We don't believe that'll be there for the prolonged cycle, 5 years. It'll likely change. There will be a desire to live downtown, work downtown, hang out downtown, and all of that. But in the short term, nobody's thinking that route. So that exodus is real. And it has created opportunity in some markets. In other markets, that opportunity isn't ripe yet. And we would advise to wait on a purchase in those areas because the heavyweights, the leading indicators are indicating negativity is coming to that overall psychological values of properties. It'll be more beneficial to the buyers. You'll hear more headlines about the detached properties being in foreclosures. You'll be hearing and mortgage in arrears, which are already rising. You'll also hear about the condo values that are down from 4 years ago, which is not a positive thing, and it does start to change the psychological impressions that this market leaves on you. So the buyers should be starting to, or we'll come into a period of maybe some joyous outcomes, whereas before there was continual disappointment or feeling that this market was unfair because investors were buying 5-6 properties at a time and you didn't get a sniff at one. Now you're going to get a chance at all of those 5-6 properties effectively at the same price upcoming. In the city of Vancouver proper, those prices are already in. In other areas, get in touch with us and we'll let you know when those will likely occur. Hope you enjoyed the podcast, but I do have one more chart that I would like to share with you. Just bear with me here another minute. The Bollinger Band. For our for the folks that did sign up for the newsletter, you did receive our Bollinger Band study. The Bollinger Band study indicates that both the detached market and the condo market were overbought, basically too high in their pricing volition. The condo market, and in the article about the condo market, we did say that prices would need to come down to $650,000 to test that lower band of the Bollinger. We didn't expect it to occur right away, but we did expect it to occur upcoming. Coincidentally, prices came down to $657,000, right, this month in the average sale price. So we are close to achieving that. The analytical indicators do offer actionable intelligence. Technical analysis clearly shows where a more important price point or time in the market occurs. And that's what we offer you, is where these important times and thresholds will take place, and how to take advantage of those once they do upcome. Again, hope you enjoyed the podcast. Thank you for taking your time and watching. Give us that thumbs up, subscribe to the podcast, and please feel free to share it with your friends and family. Take care, folks.